One of the hottest topics everyone's talking about lately in China is, of course, the huge surge of the Chinese stock market. From over 2,700 points on September 24th to 3,336 points on the last trading day before the National Day holiday, the market surged for more than 20% in just 5 days. I'm sure a lot of you are feeling tempted now. When everyone is talking about the stock market and the media is flooding with reports, I bet even those who never invested before, or those who swore off stocks after getting burned by the China stock market, are starting to feel a little restless and eager to jump back in. So today, I want to chat with you about whether this is the right time to jump in. If you have never invested in stocks before, should you start now? And if you are already in the market, should you go all in and invest heavily in the Chinese stock market now? Hello everyone, I'm Mr. Chew. Welcome to Chew On It. If we are going to talk about whether it's the right time to enter the market, we first need to understand why the China stock market surged so suddenly. What's the reason and logic behind this spike? Only by analyzing that can we make a reliable judgment. As most people probably already know, the Chinese government rolled out a series of strong economic stimulus packages at the end of September with unprecedented intensity. These aggressive measures spanned 4 key areas: the stock market, real estate, monetary policy, and consumer spending. Bloomberg even stated that this is one of the boldest stimulus packages China has implemented in decades. I'm sure many of you have already come across the details of these policies from various sources, so I won't go into them here. Today, I want to focus on the stock market. On September 24th, the Chinese government announced a 500 billion yuan of loan package for funds, brokers, and insurance companies to purchase Chinese stocks. Additionally, the central bank stated that it would establish a special 300 billion yuan re-lending facility for stock buybacks. This essentially means that Chinese citizens can now access low-interest loans to invest in the stock market, with rates as low as 2.25%. It's important to note that China previously prohibited stock trading with borrowed money. So it's very clear that the Chinese government is trying everything to boost the market. This series of policies effectively means that the central bank has injected 800 billion yuan into the stock market all at once. Moreover, a government spokesperson mentioned that this 800 billion is only temporary and the amount could be increased based on future circumstances. Sure enough, as soon as this news was announced, the stock market skyrocketed the same day, shooting past the 3,000 point mark. Alright, so now let's talk about the big question. Should you jump in or stay out? I'm going to break this down into 2 parts, the short term and the long term. Let's start with the short term. If you have a decent understanding of the stock market and are looking to make some quick bucks, I personally think it's a good time to enter. However, there's one very important condition, absolutely crucial, and that is you must be someone who knows how to quit when you're ahead. I'm sure at this point, 99% of you are probably thinking, hey, no problem, I'm not greedy. I just want to make a little and I can definitely cash out at the right time. But I'm here to tell you, in reality, you probably cannot. I'm not saying all of the 99% who think they can cash out at the right time won't be able to, but I believe at least 98% won't. Don't underestimate human greed, especially your own. Everyone knows the importance of quitting while they are ahead, but very few people can actually do it. If most people were able to quit while they are ahead, you would probably know plenty of people who have made money in the Chinese stock market over the years. But in reality, do you? Let's take a look at this classic chart showing the pattern of individual investors entering the market. It clearly illustrates why individual investors almost always end up being the cannon fodder of the stock market. This is a stock market curve chart. At this point, retail investors are thinking, the stock market is rising, but I'm a rational, smart person. I'll just observe for now. It does seem like an upward trend for sure. I'll wait for the next pullback and buy in at the lower point. Missed the best entry point, but shouldn't wait any longer. Time to buy in, ready to make a fortune. Made a profit. Good thing I didn't wait any longer. Perfect timing. I'm the next Warren Buffett. This is just a small pullback before the big surge. Opportunities here. Time to go all in. It's just a normal correction. It'll pass soon. This isn't looking great. I'll sell as soon as it bounces back a little bit. This has to be the bottom. It cannot drop any further anymore, and the Chinese people will start a revolt. What the f is going on? Motherfucker. What the hell is the government doing? Why isn't the Securities Commission stepping in? I've had enough. Years of hard-earned money, slaving at work, saving every penny, all gone. I'm never touching the stock market ever again. Maybe I should just sell everything, but the loss is huge. What should I do? Completely demoralized. Forget it, I give up. Time to cut my losses and sell everything. Seriously? As soon as I sell, it starts going up again. Why are you fucking with me? Looks like I made the right decision after all. Clearly, I know what I'm doing, just unlucky this time, that's all. Why is it going up again? What's going on? Based on my judgment, it has hit the peak. No way it's going higher than this. Looks like the next bull market is about to start. This time, I've got experience. It's going to be different from before. I'll definitely earn back everything I lost. My judgment was spot on. Time to jump back in. This time there's no doubt. China market are going to soar to 8,000 points. Time to increase my position. I'm the Chinese Warren Buffett. This chart is not an exaggeration at all. In fact, buying as soon as the market rises and selling when it drops, blindly chasing gains and cutting losses, is a mistake most retail investors make. To be blunt, the majority of retail investors are gods in a bull market but dogs in a bear market. They think just by reading a few books on the stock market, they have become the next Warren Buffett. Some of you might be thinking, that's not me, I'm not greedy, I'm different, I can definitely cash out at the right time. But the thing with the stock market is that it's incredibly difficult to cash out at the right moment. It's not just about discipline or whether you're greedy. Why is that? Let's say I tell you there's something that's graded on a scale of 100. Now, when it reaches 80 something, and you have no idea whether it will go up or down next, I believe there are indeed some disciplined individuals who could cash out at this point. But the problem with the stock market is you have no idea what the full score is. When you don't know what the maximum point is, it's impossible to know what qualifies as good enough. 1,000 people could have 1,000 different interpretations of what good enough means. Therefore, while I do believe that China's stock market could continue to rise in the short term, there's still significant risk for the retail investors. You need to think carefully before jumping in. If you still decide to enter, set a reasonable target. Once that target is hit, no matter how hot the market seems, no matter how many insider tips Auntie Wang from the mid-market downstairs gives you, you must sell off everything without hesitation and exit the market. But that's easier said than done. Alright, now let's talk about the long term. Since I've been stressing the importance of quitting while you're ahead, you can probably guess that I don't believe this current bull market in China will last. So next, I'll break down why I'm not optimistic about the medium to long-term outlook for China's stock market. Since we're discussing the long term, we need to understand the essence of this current surge in China's stock market. The total value of China's stock market is around 70 trillion yuan, which is much smaller compared to the 450 trillion yuan real estate market. When you suddenly inject 800 billion yuan, over 1% of the market's value, a sharp rise is inevitable. But everyone should consider a simple truth. If printing money and pumping liquidity into the market could truly save the economy and stock market, there wouldn't be any economic crisis in human history, would there? What is the essence of the stock market? It's a place that reflects the value of listed companies and people's expectations of their future value. Now, with the government forcibly injecting liquidity, there's more money in the stock market, but the fundamental competitiveness of these listed companies hasn't changed at all. Pumping money into the market won't make a company's product suddenly better, won't make its management team suddenly smarter, and certainly won't lead to breakthroughs in its stagnant R&D. No matter how much liquidity you inject, a bad company remains a bad company. It won't magically become a good one just because its stock price went up. Therefore, a stock market propped by a forced liquidity injections can't be sustained in the long run. That's my first point. The second point is, we need to clearly understand the true nature of China's stock market. To all of you eager to join this round of China's stock market frenzy and grab a piece of the action, I'm not here to stop you from making some quick bucks. But I do hope you recognize one crucial fact. China's stock market is essentially a casino. Why do I say that? Because the financial statements of Chinese listed companies cannot be trusted. According to a report by the state-controlled Xinhua News in January this year, in 2023 alone, over 30 Chinese listed companies were penalized for committing financial fraud. And that's just the ones who got caught and were publicly disclosed. How many more haven't been caught or were perhaps covered up by the CCP? In a healthy stock market, people assess a company's value based on its competitiveness and future prospects. But when companies in the market can't even provide trustworthy financial statements, how are you going to assess their value? When you cannot determine a company's true worth, that means all your buying and selling is based solely on intuition and luck. So how is this stock market any different from a casino? I'll take it a step further. Even if we set aside the issue of financial fraud in Chinese listed companies and assume most of their financial statements are trustworthy, but the questions I'm going to ask are, how many Chinese investors actually study a company's financial reports before buying its stock? How many regularly attend shareholder meetings of the companies they hold stock in? Out of 100 Chinese investors, is there even one who could understand financial statements? Forget about understanding them. I bet there aren't even many who can accurately name the balance sheet, income statement, and cash flow statement. Yeah, a lot of Chinese stock buyers love to talk about Warren Buffett-style value investing. But if they don't even understand the basics of a company's financial reports or attend shareholder meetings, what kind of value investing are they really talking about? At this point, some might ask, come on, we all gotta work. Who has the time to study financial reports? Are you saying American retail investors really understand financial statements? And that's exactly why I say you have to recognize the true nature of China's stock market. One of the biggest differences between the US and the Chinese stock market is retail investor participation. In the US, only 20% of trading volume comes from retail investors, while the other 80% is driven by professional investment institutions. In China, it's the direct opposite. More than 80% of trading volume is from individual investors, with only 18% coming from institutions. Because the financial investment environment in the US is highly mature, the vast majority of ordinary people entrust their money to professional institutions for investment and management. These institutions, of course, base their investments on fundamental analysis of the companies. The remaining 20% of retail investors are often professional traders who research the stock market full-time. This is completely different from China, where you have square dancing grandmas and butchers from the market all personally jumping into stock trading. So, I'm sorry to say, many people think they are investors just because they bought some stocks. But let me be blunt. There is essentially no difference between you and those betting on red or black in a casino. Of course, if you want to try your luck at the casino, that's fine. People go to Macau or Las Vegas for a little fun, and there's no harm in that. But the problem is, everyone who enters a casino knows that they're gambling. The scary thing about Chinese stock market is that most people think they're investing, not realizing they're actually gambling. If you don't understand this fundamental truth, you could very well end up losing everything. You need to understand that every casino in the world operates under two unchanging rules. First rule, the house always wins. Second rule, a few individuals may strike it big when they're lucky or when they catch the right moment. But as long as they don't leave the game, it's only a matter of time before they lose it all again. Some of you might be thinking, "Come on, Mr. Chu, you're a Stanford geek. What do you know about gambling?" Well, let me tell you guys a secret then. As a matter of fact, I started betting on soccer with people from the streets when I was around 15 or 16, back in middle school. The bets weren't big. I would just use my pocket money and red envelopes saved up from the Chinese New Year. When my parents finally found out one day, they were ready to give me a good scolding. But after I explained my understanding of gambling to them, they never bothered me about it again. What I told them then is the same thing I'll tell you now. Every time I won several bets in a row and made some good money, my classmates would cheer and say, treat us, treat us. Of course, I had no problem treating them. But when we gathered for a meal, I would share this one principle with them. As long as I don't make the decision to quit gambling for good, today's winnings are actually just an illusion. Because if I keep betting, it's only a matter of time before I lose all of it back. That's why, after hearing this, my parents never worried about me gambling again. They knew I understood the true essence of gambling. I wasn't naive enough to believe that gambling could actually make someone rich, and that was enough for them. The same goes for China's stock market. In the past, China has gone through a few stock market frenzies. In 2007, it surged past 6,000 points, and in 2014, it soared again to over 5,000 points. Just like now, back then, everyone on the streets was talking about stocks. People would excitedly share how much their stocks had gone up whenever they met. Veteran investors surely still remember those times vividly. But back then, whenever someone excitedly told me how much they have made in the stock market yesterday, I would congratulate them, but deep down, I knew one thing for certain. Unless they cashed out everything today and swore never to trade stocks again, their so-called profits were just an illusion. Because every individual investor who makes money will eventually reinvest it back into the Chinese stock market, which at its core is like a casino. And sooner or later, those so-called gains will be lost, with most people ending up losing even their principal. That was the second point. Now, the final reason why I don't recommend holding Chinese stocks long term is even more important than understanding the nature of China's stock market. It's about recognizing your own position. China's stock market were officially opened on May 21st, 1992. Aside from those early years when a few people who got in first did make a lot of money, think about the last 10 to 20 years. Among your family, relatives, friends, friends' relatives, and relatives' friends. Is there anyone who has truly gotten rich from the stock market? Anyone? Out of 100 people who have made their fortunes through real estate, you would struggle to find even one who got rich through the stock market. According to data from Sina Finance, China's stock market has nearly 200 million individual investors, making up 99% of the total investors, while institutional investors account for less than 1%. These 200 million individual investors contribute 82% of the market's trading volume, but only 10% of them actually make a profit. And that's the tiny minority at the top of the pyramid. So, I hope everyone can take a moment for some honest self-reflection. In your life, in which area have you truly ranked among the best in all of China? Was your score on the college entrance exam among the top in the nation? At work, can you confidently say that your professional skills are among the best in the country? Whether it's academics, sports, painting, public speaking, chess, anything. Have you ever been at the national top level in any of these? Which means it is extremely difficult to be the cream of the crop in anything in life. Then why do you believe you can be one of those few at the top of the pyramid in the Chinese stock market? China's stock market is essentially a zero-sum game. What does zero-sum mean? It means that for every winner, there's a loser. There cannot be all winners. You can buy a stock only because someone is selling it to you. And when you sell, it's because someone else is buying. One of you must be the fool in that transaction. What makes you so confident that the fool isn't you? Let me hit you with another harsh truth. If the Chinese stock market were really a surefire way to make money, you would probably need connections just to open an account. Chinese common people couldn't even get their hands on a single cabbage during the zero COVID policy lockdowns. So why do you think they will let you snatch up the best stocks and make big money? That's why we all need to have some self-awareness, especially in China. Otherwise, it will end up costing you dearly. A few days ago, I made a comparison on Twitter. I said that China's stock market is a lot like China's men's soccer team. After all these years, they have made little to no progress, and just when you think you're seeing some improvement, the next game takes you right back to reality. The biggest similarity between the two is that, despite breaking the hearts of Chinese people for so many years, they still have die-hard supporters who continue to follow and support them. See, they're indeed very similar, right? So let me ask you this. If today the Chinese men's soccer team wins 1-0 against Thailand, would you suddenly start thinking, oh, the Chinese men's soccer team has finally become strong. Tomorrow they'll beat Japan 3-0 and then crush the French 5-0, and by 2026 they'll win the World Cup? You wouldn't have such expectations, would you? Because after all these years, you already know the true colors of the Chinese men's soccer team. But right now, that's exactly how it is with the Chinese stock market and Chinese retail investors. A market that has been rotten for decades goes up for one day and suddenly everyone forgets about all the financial frauds. After 2 days of gains, they forget they're just cannon fodder. By the third day, they've forgotten that the current level of over 3,000 points is merely a return to where it started 5 years ago. If we compare the 800 billion yuan bailout to soccer, it's like the government spent billions to hire 11 of the world's top players to play a few matches for China. You might see immediate results with the first few games all ending in wins. But in reality, Chinese soccer hasn't gotten any stronger because the foundational elements like facilities, youth training, coaching systems, and management remain unchanged. So when those star players leave, everything reverts to the way it was, leaving nothing but a mess. The ones who get hurt are the gamblers who don't realize that nothing has changed, who bet everything thinking the team will be great forever. Now think about it. The reason the Chinese government rolling out the most aggressive economic stimulus measures in history must be that the Chinese economy is facing an unprecedented crisis. What are the fundamental reasons for this economic meltdown? Collapsing consumer spending, runaway local government debt, declining business confidence, foreign investment fleeing, foreign direct investment FDI dropping to its lowest in 25 years, and the shift from high-margin Western markets to low-margin ASEAN countries in exports. None of these fundamental issues will be resolved just by injecting liquidity into the stock market. Ultimately, I'll say this again. If printing money and pumping cash into the stock market could save an economy, there wouldn't have been so many economic crises and the fall of empires throughout human history, would there? At this point, someone might say, "You're saying these policies won't save the Chinese stock market or economy. Do you think you, Mr. Smarty Pants Chew, are smarter than the entire CCP think tank?" Actually, I don't think that. We can say that the CCP is evil, but we shouldn't assume they're stupid. I believe, like me, the CCP also knows these policies are like drinking poison to quench thirst. But they have no other options left. It's their last resort. Why do Chinese even have the expression drinking poison to quench thirst? Because when you are so thirsty that not drinking means death, you might as well drink the poison and hope for the best. The CCP has tried everything over the past 2 years and none of them works. If I were in Xi Jinping's advisory team, this is probably the only option I could suggest as well. However, if I were really part of Xi Jinping's advisory team and that I'm immortal, the time to give advice wasn't now. It was back in 2018 when he amended the constitution to become an emperor and rule for life. The time to give advice was in 2021 when he cracked down on private businesses, and in 2022 during the disastrous dynamic zero COVID policies. China's economy is in this current state because of Xi Jinping's retarded policies, one after another, such as common prosperity, the crackdown on education and the internet sector, all of which have repeatedly shaken Chinese entrepreneurs' confidence. The economy is bad because of the rise of fanatical nationalism and wolf warrior diplomacy that drove away foreign investments, and the alignment with Russia and the terrorist group Taliban against universal values, which has triggered a decoupling from the West, etc., etc. The time to give advice was back then. Of course, we shouldn't blame Xi Jinping's advisors for not stopping him at the time. After all, Giving advice that goes against the emperor's wishes requires one to be immortal. By now, it's all too little, too late. The current euphoria in the stock market is like a critically ill patient in the ICU suddenly sitting up after being in coma for years, appearing energetic, great appetite, laughing and chatting around. The family members are, of course, overjoyed, but the few veteran nurses in the room know better. They exchange knowing glances, ultimately refraining from voicing the two words they all have in mind: terminal lucidity. Thank you for watching Chew on It. Hit like and subscribe if you would like to know more about what's going on in China. I'm Mr. Chew. See you next time.